Welcome to Ofofo Studio. My guest for today is Sunil Jain from Sprout VC and Sprout Investment Bankers. This is a very unusual combination, something that you don't get to see a lot. A venture capital fund that is also an investment bank.
So thanks, Angad, first for having me on the podcast.
Welcome to the show.
We just to give you on that note, we started as an investment bank.
Okay.
Based in Bangalore, early 2012, and at that point in time, very few angel investors. I think there were less than about 500, 600 angel investors
Right.
in total. Most of them based in Bangalore. So we started doing angel investing back then from Sprout Capital, which was the investment banking arm.
Right.
Then slowly, we decided that, why don't we set up a fund? And that's how, Sprout Ventures came about, which is like a 6-year-old business now. We fully deployed on Fund 1, and now we're investing out of Fund 2.
Okay.
So, but it's an unusual combination, but, we were probably amongst the first few IBs, in India, which actually, thought of having a venture arm.
Nice.
But these two businesses don't conflict really for us. I mean, that's a late stage business on the advisory side, and this is a really early stage investing business. There are reasons why we got into it, but maybe we can talk about that a little later or at a different point in time.
We can talk about them right now. Actually, what were your motivations to start something like this?
So, like I said, I was doing angel investing, and when I was doing this, a lot of friends gathered around and they said, let's co-invest with you. So while this was happening, a few of them, piggybacked on my investments, and they said, we will co-invest, we'll write a check alongside you.
Right.
Like it happens, one investment went sour, and there's this very close friend of mine who called and said, boss, ye to paisa duba diya tune. And I was like, boss, I'm not making any fee from you. I mean, you decided to invest your money alongside me.
Yeah.
You had the opportunity to meet the founders. You had all the opportunity to make your own decision.
And if you had made a profit, like the conversation would have been very different.
Incidentally, they also got beautiful exits on some of those investments which they co-invested with.
Yeah.
And that triggered a thought, while we are in this business of, advising companies, there's also a little bit of intelligence which we get, while dealing with investors in terms of what kind of companies they want to invest into. So there is a preemption which we were trying to manage while I was doing angel investing. And around the same time, my current partner, Sahil, we had worked together previously, and he had come back to India after his master's. He was working in the startup ecosystem. We caught up, and then we said, why don't we institutionalize this? Because I have a network of, friends who, want to co-invest. And the timing was such that, around the same time, this call with a friend happened, and I said, to hell with it, let's set up a fund, let's institutionalize it, might as well make some fee on it. Correct. So that was a trigger point. But I think the larger thing was, investment banking per se is mostly a success-based environment.
Right.
And
fund-based,
fund-based is, a fund-based income is more continuity, it gives you a view in terms of, having a continuous flow of either investing and making bucks.
Right.
So also it was a thoughtful decision that this is something which we want to enter into, and the timing was right. Then there were not many micro VCs funds who were institutionalized at that point in time. So we said let's go and set this up. So that's how it started.
So one thing about VCs is like one thing that also goes unnoticed is that they also tend to be very entrepreneurial in nature. Because you also have to go about raising funds for your fund, right?
Absolutely.
So you have to see that side.
We are a startup. We are also a startup, and just that we are a startup which is investing.
Right.
So it's just like you run any startups. You have to go through the hurdles. You need co-founders. You need to build a team. You need to figure out your pipeline. You need to figure out demand. You need to figure out supply. Supply here is supply of capital, which is where you go to limited partners and convince them that I will manage your wealth well.
Right. How do you go about finding the right partner?
So interestingly, I've been in this ecosystem for like 20 years now. From my investment banking days. So both for both the funds which we have raised so far, we've actually not gone to market to raise capital. It's capital raised from our network of clients, friends, social ecosystem, and people whom we know. So we have not really gone to market for these two funds.
Okay.
We will definitely hit the market maybe for our next fund. in terms of raising institutional capital as well.
Right.
But so far, I think it's been mostly people whom I have known from my experience over the last 20 years in this industry.
What were your experiences in before you went about starting investing in businesses?
So, one of the things about being an investment banker is that you get to evaluate various kinds of businesses,
Right.
And the organizations which I worked for earlier allowed me to look at different industries.
Which organizations were those?
So this was JP Morgan,
Nice.
and then subsequently an Indian boutique called MAPE Advisory.
Okay.
They are now acquired by Incred, so they called Incred MAPE.
Mhm.
So between these two organizations, got to look at a lot of industries, consumption, industrial, metals and mining, infrastructure, technology. So, and these were agnostic banks. While at JP Morgan, I was tied to a sector. At MAPE, I looked at the entire span of sectors.
Okay.
And that gives you an opportunity to understand different businesses.
Okay.
Right. And when you start understanding different businesses and the dialogue with investors in terms of, where they want to invest, the realization, set in very early that there's always, an avenue to make capital if you can invest early in some of these companies.
True.
Right. Obviously, you cannot be right always.
Right.
If you can spot a good entrepreneur who's got the capability to build a great outcome, and if you can, participate in that journey early on, it can maximize wealth. And that was the insight. So I started investing once we set up Sprout, which was the investment banking business. 3 years into it, we started investing out of the Sprout Capital balance sheet in startups.
Okay.
And during that journey, like I mentioned earlier, I met Sahil. He was in India, and we decided that let's set up an institutional platform, and that's how we got about it.
Right.
But that insight or knowledge of preempting into what kind of founders a typical private equity or a Series B or a Series C investor wants to invest into was one of the things which inspired us that can we find some of these companies early.
Okay.
Not with an intent that we want to offer the banking services to some of the early startups. It was a pure intent that there is a wealth creation opportunity if you can preempt and invest into some of these companies.
Right.
Second, based in Bangalore, a lot of deal flow. I was amongst the first early set of angel investors, and once you invested in a few companies, people get to know that this guy invests.
Right.
So got a lot of quality deal flow in those early days. So ended up investing in a few startups back then, and that also triggered in terms of giving you a fair understanding of what new economy businesses were being built.
Right.
Right. Also gave insight into some great quality founders. In terms of how they're thinking about the market, how they're disrupting the market, how they want to build businesses on an asset-light manner.
Correct.
Which were
on a what manner?
On an asset-light.
What does that mean?
And if you look at wind down 20 years, 30 years back, and let's say 20 years back, private equity was mostly investing in sectors which were which we call as traditional centers, right? Traditional sectors, for example, metals and mining, high capex centers.
Closer to production.
Yeah. Industrials.
Right.
Consumer manufacturing.
Got it.
Then sectors like cement, steel, which are high capital intensive sectors. And these businesses typically invested a lot in assets. When I say assets, this could be land, building, infrastructure, and machinery.
Okay.
Right. This was what was happening 20 years ago, and most businesses where private equity would step in revolved around these themes.
Got it.
There were also investments in the technology which we saw in the I'm talking from an India perspective. Of course, globally, technology in the US was far ahead of us, at least 20 years ahead of us.
Yeah.
In India, technology businesses didn't get that much capital as it's available today, right?
True.
What changed around 2013, 2014 is that there was a new wave of entrepreneurs who said that, one, digital adoption is rising in India.
Right.
Two, there is capacities available. Let's marry these and then, build business outcomes or business models which is more capital efficient.
Got it.
Right. And the capital efficiency where you get a good return on capital investment is a theme which, triggered the initial wave of investments. Of course, then, you had words coined in terms of D2C, you had different things. But when we were evaluating these businesses, the way we evaluated is that traditionally, if you look at businesses, which was 20 years ago. They set up a manufacturing plant. They would invest a certain amount of capital,
Yeah.
right, which would sit on the balance sheet.
Yes.
So it was not an expense at the P&L side. It was sit on the balance sheet.
Right.
And here's a new wave of businesses which was investing in marketing dollars, right?
Right.
This is also an investment.
Right.
It's an investment into a consumer base.
Yeah.
The only part is that, this was sitting in the P&L. So, the P&Ls would look bad from that perspective. But I think we understood that, these are investments. This is a different class of founders or entrepreneurs trying to build a different strategy of building businesses.
Correct.
Right. That's why you have items sitting on the P&L versus traditionally you would have items sitting in the
very
balance
interesting insight. Yeah.
Okay, so that's an insight which triggered us in doing the first few deals. I mean, these are the first few deals which I did as an angel investor, where I would talk to some industry veterans and they would say, "Yeah, he's blowing a lot of money on marketing."
And, I can imagine those conversations. Yeah.
And how does one build business by blowing this money on marketing and stuff like that? But I think we understood that it's ultimately an investment, whether the investment is sitting in the balance sheet or whether the investment is sitting in the P&L. As long as that investment is going to yield you something in the future, it's worth an investment. And probably early movers to take that kind of a view. Of course, there were many other VCs who were more seasoned.
But you're still very early. You're still
we're still very
7-8
early.
years.
Yeah. I mean, I started investing in 2013, so it's more than 10-11 years. So I mean, as an angel investor, not as an institutional VC.
So as an angel investor, were you sector agnostic in terms of what you were investing in?
Yeah. So fundamentally, I am probably one of the few guys who repeated nursery or. So my fundamentals are very strong, and that is probably something which I use a lot when I assess a business. What I mean to tell is that I get into basics. Even if someone comes and describes a complex problem, I want to break that down into small modules and understand the fundamental basics of what he's trying to build.
Nice.
My belief is that if your fundamentals are strong, I mean, if you're very strong in alphabets and word formation, then you will figure out sentence formation.
Right.
Okay, so a lot of these startups came to us, with jargon, with whatever. But I used to take time as to sit with them, fundamentally break down their business. And अगर fundamental समझ में आ गया ना कि word formation आता है, तो sentence formation तो समझ लेंगे.
Absolutely.
So that was how we evaluate. I mean, at least I evaluated businesses. So just this morning, talking to some company which is in the space tech, right? I mean.
Space tech.
Yeah, space tech. I mean, it's not a sector which we invest very often, but interesting set of founders. So, we did a conversation with him, trying to understand, because this is more long gestation investment. These are not investments, which will monetize very soon.
Yeah.
And given that, we've mostly invested in businesses which are closer to monetization, spent more time. Of course, founders always come with terminology related to the industry, and since we look at varied factors of industry, I think it's just about doing that conversation with him, breaking it up, understanding the fundamental use cases, key, where will this be deployed, why is this important,
right?
So those are the blocks, and then once you get the small fundamentals right, or the small like I say, the word formations right, figuring out sentence formation is
not a
easy.
problem. Yeah.
So that's how we end up evaluating businesses. And once you know how to do that, right, I mean, the sector doesn't matter. I mean, to me, fundamentally, all businesses, at the end of it, need to monetize. Right. And tech is largely an enabler.
Yeah.
Okay. Irrespective of what, I mean, there could be services around tech, but there are two kinds of businesses. There is either a service business or a product business.
Correct.
And tech is largely an enabler. The degree of enablement or usage of tech in a business could vary. Right. Of course, we want to invest in businesses or in founders who want to adopt technology in scaling.
Got it.
Right?
Yeah.
The degree differs, and to me, sector, is varied, but doesn't matter. I mean, as long as we understand the fundamental principles of that business in terms of how they will monetize.
Got it. So tech stack, use cases, and founders.
That's right. And founders is the most important.
What do you look for in founders?
See, I mean, we are early stage investors. I mean, I started as an angel investor. The fund we invest is a micro VC fund. We are seed stage investors.
What makes a micro VC? What's the difference? What's the...
Yeah, so, VC is typically someone who can put between 1 to 5 million in check size.
Right.
We do like up to $1 million. So, micro VC. When we started in 2017, late 2017, there was mostly the venture capitalists who were also doing early checks, which continues today also.
Yeah.
But there was no defined set of people, which were doing only like seed checks.
Right.
And that was a wave. Now there are a bunch of them, who are micro VCs. I mean,
Right.
anyone who's putting up $2 million
Hmm.
also becomes the first institutional check in most of the companies where we end up investing.
Correct.
So when we set this up, the thought process was very simple that, in the VC business, let's figure out, where we want to invest. I mean, the fundamental thesis remains the same, धंधा है.
Exactly.
ठीक है, बाकी tech का usage could vary.
Hmm.
But since the stage we are investing is really early, the founder is very important for us.
Right.
Okay.
Right.
So, I mean, there is something called 3 C's, which I use for, evaluating a founder, which is, one is, clarity, which is clarity of the market he wants to be in, clarity of thought in terms of how he wants to build the business. Second is, the character of the founder itself. How does he behave? I mean, I personally spend almost like an entire day or at least 6 to 8
Nice.
hours with a founder before we decide even to take it to the next level.
It's a long-term relationship.
It's a long-term relationship.
Yeah,
So
yeah.
it's about spending time with them to understand, what is the character, how does he behave with different people, how does he, carry off. I mean, whether it could be even a dinner meeting, right? It could be a
Absolutely.
lunch meeting. How does he react or converse with different people? So that gives, some insight into the character. It could also be, what are the hobbies he's pursuing.
Yeah.
So, that's character of the founder. The third thing which we look for is, charisma in the founder. And when I say charisma, it's about, how he can, have relationship. What is the charisma in which he deals with his inferiors, his superiors, his subordinates, his
Right.
employees, his stakeholders.
Yeah.
And that is very important, in terms of looking at founders. So, I come from a family of jewelers. So 4C होता है डायमंड में, तो हमने उसको मॉडिफाई करके 3C कर दिया है. तो so clarity, character और charisma, I mean that's how I way. Of course, Sahil, my partner, is also meets his founders independently. I mean, he's got a different set of evaluation.
For sure.
And I think together we bring different perspectives on table, in terms of, looking at founders and understanding them. But founder is one of the most important things because the stage we invest is really early.
Absolutely. So whenever you're evaluating founders or businesses, there'd be a lot of back and forth between the investment committee, right? I mean, there are so many, like you just said, like, Sahil would have a different perspective than yours.
Absolutely.
How does that balancing work? Like, what are the conversations like in which sometimes you'll have to disagree, or sometimes you have to feel very strongly about something that the other person doesn't? What are those conversations
So
like?
see, when you are partnering with a co-founder, right? I mean, obviously there are going to be differences,
For sure.
like in every other, every other business in the country. I mean, if you have a partner, there are going to be differences.
Yeah.
I mean, you'll also have differences in marriage, right? I mean, but you need to work around it and keep jugging along.
Right.
So there are differences at times. We take a joint call. Let's let go of this deal. I mean, it could be different perspectives. There could
Right.
be deals where I am bullish on. There could be deals where Sahil is bullish on.
Mhm.
But then if we are not on consensus,
Right.
I mean, generally we let go of. I mean, it may turn out to be that this is a miss from us, but
Makes sense.
But that's what it is.
Yeah. Okay. So when you move from being an angel investor to setting up an institutionalized fund, did you start focusing on certain sectors based on, again, like competencies of the partners and also like the current then conditions of the market, or did you continue doing things the same way you were doing when you were an angel investor?
No, so two things. As an angel investor, I was more agnostic. So I also looked at because you're writing a personal check. I've invested in companies which do research in science, deep science, which are long gestation.
Yeah.
Kind of outcomes
Right.
as an investor.
Yeah.
But when we set up the fund, it was third party money.
Okay.
Right?
Yeah.
And the intent was very clear that was let's set up fund. Not only should we return the capital quickly, we should also return good amount of capital back to these investors.
Accountability increases.
Yeah. So
were you
accountability-
more accountable towards yourself, or do you feel yourself more accountable towards people that you've taken money from?
when you take money, there is a sense of responsibility which steps in.
For sure. Yeah.
Right. And when you want to set up a business which is a business of investing,
Yeah.
Accountability has to increase, right?
Correct.
I mean, and if it is not increasing, then there's something wrong.
That's a problem. Yeah.
So accountability definitely goes up. So at around that time, we sat together. We still, largely we cover a large set of sectors, but we invested in two themes. The two themes for us was, one is a consumption theme.
Okay.
Okay. Largely, if you look at India today, there's a large consumer demographic dividend which will play out.
Right.
Okay. And our insight into that was that if you look at some of the Asian geographies,
Okay.
which include, Japan way back in 1950s, South Korea, China, maybe even Indonesia, all these countries, once the per capita GDP, went past $2,000,
Mm-hmm.
in the next 2.5 decades, the per capita GDP has grown about 10 to 15 times.
It's exponential.
Okay, it's exponential growth in the 2.5 decades after the trigger point. The trigger point for us was $2,000.
Okay. Where are we right now?
So India crossed $2,000 in 2000. I mean, the first time they crossed was in 2019.
Okay.
But then, there were two COVID waves. It went down.
First time we hit it was 2019.
2019. But COVID 1, COVID 2, it went down again. And 21 again, it crossed the 2000 mark. So we think that the next 2.5 decades would be high growth. And when we were setting this fund up, we figured out that, we're going to hit this trigger point very soon. So consumption is a large thesis for us.
Right.
So we will invest both in brands, which could be consumer brands, or it could be service brands.
Correct.
Okay. That's one theme. The other theme is that, we'll invest in the technical talent of the country.
Right.
And within that, obviously, it's a large gamut. But within that, we shortlisted a few sectors. So it was like SaaS, it was B2B marketplaces, it was companies which were building solutions around IoT, and new age tech. Which includes AR, VR, machine learning, AI, stuff like that. AI is more recent, but we figured out that new tech, incorporation of new tech into solving something is where we will invest into. So these were the two themes. And alongside these themes, very clearly, we wanted to invest in companies which could be capital efficient.
Capital what?
Capital efficient.
Right.
What I mean to say is that, I wanted to invest in companies, for example, anecdotally, if someone wants to set up a vertical marketplace, we'll probably look at it. But if someone wants to set up a horizontal marketplace, it requires a lot of capital.
For sure. Yeah.
So that's not a sector we will probably look at from a fund thesis perspective.
Yeah, makes sense.
And the background to this was that, very clearly we wanted to generate returns and return it back to the investors quickly.
Yeah.
So with that thesis in mind, we said that, let's stick to these two themes. And these are very broad themes if you actually look at it.
Very broad, yeah.
Right?
Yeah, correct.
The only thing which will not come is probably infrastructure, real estate,
yes,
deep research, science research, and those are the only exclusions. Otherwise, it covers the entire gamut.
Right. It's also very different from your earlier experiences with JP Morgan or certain things that led you to invest, right? This is the complete opposite, isn't it?
No, so in my earlier experiences, yes, when I was a banker at JPM or even at MAPE, the sectors which were in vogue were completely different. When I was investing as an angel, obviously, the VCs had just emerged in India in 2008-9, and I started investing around 2013, 2014, right? That's when the wave of VC investments in India was emerging.
Right.
What changed in 2013, 2014 is that we had a new breed of entrepreneurs, who were coming and saying that, we will disrupt traditional businesses. Yeah. And this goes back to what I mentioned about, balance sheet investment versus, P&L investments.
Okay.
Right. And at that point in time, very few were able to, read through that.
Right.
In terms of, understanding. A lot of high net worth, friends of mine who were investors even before that, they were investing in businesses, but they said, यार ये धंधा नहीं समझ में आता है, इतना पैसा branding में डल रहा है, इतना पैसा marketing में डल रहा है. This is on consumer business.
Yeah.
Right? So,
and that concept of burning, that
concept of burning was not something which they were used to, and not only them, even a large corporate.
Yeah,
the family offices have now emerged, right? But the family offices have been looking at these businesses since 15-20 years, and they also said, we don't understand this burn game. Yeah. Right? A lot of them went on record to state that it was...
Right. There were very strong statements made around that time.
Yeah. And because we had that insight to, look into, what this business model was, and the distinction between, investment will yield results is what helped us start doing those investments.
Yeah.
And that's how it's very different from JP Morgan days, MIP days. It was more traditional investments.
Right.
But 2013, 2014, when I started investing as an angel, I think I was amongst the early angels to understand these new disruptive business models, where chase top line, build a base, and then we'll figure out profitability. It's very similar to 20 years ago. Someone will build a large capacity, right? Let's say cement, he will install a 2 million ton capacity, but it's not that day one by 2 million ton capacity utilized.
10 years maybe,
वो 7-8 साल लगता था to utilize that capacity, right? But they were still investing.
Correct.
For a larger scale, and it's a similar thesis which these founders were doing. I mean, they were investing for a larger outcome. They were investing very early in a different format.
Right.
And that understanding came in pretty early, and then we were able to take those initial calls as angel, and then even as a micro VC fund.
Okay. So, do you remember which were the first set of companies that you evaluated and eventually invested in?
So, quite a few of them, but some of them, for example, Rupeek. Just to give you a contextual, Manappuram was there.
Okay. Yeah.
Gold
loans. Yeah.
Right?
Yeah.
Very traditional branch lagao, setup lagao, ye lagao.
Correct.
But fundamentally, dhanda is a solid dhanda. You've got gold as mortgage.
Mm-hmm.
So there's no way you're going to lose capital.
Right.
Okay. And then I met the Rupeek founder, and he said, I will do it differently. I'm not setting up branches, but I'll send people to the home of the consumer.
Okay.
Because there was a stigma attached to some of these HNIs saying that, or some of the people who saying that I will not go to a pawnbroking shop, or I will not go to a lender and stuff like that.
Interesting.
Okay.
But they could always send
fundamental concept maine hi socha. I mean, in my mind, it was very clear, right? What is he doing? He's building a financial services business.
Right.
Gold loan. Gold is with you. So you're secured from that perspective.
Yeah.
He's building an asset-light business where he's tying up with banks.
Right.
So this is what we thought, and I know I did an angel check alongside a few other angels, and that's an example. There are a few other companies. There was a company called Design Cafe where we invested. Group of friends invested. Kaval
sounds very familiar.
Yeah, Kaval, who's Fireside, also invested in that seed round, which we invested with the founders.
Okay.
This was more a paper plan investment. Founders came with a vision that they will build this. Looked at the founders; they were both architects. Built an interesting design practice, and they were moving away from design practice to institutionalize or to create a business which was in the home interior space.
Got it.
Okay. Again, underwriting was pretty simple. There's a need for it. These guys are architects. They've understood. They've built homes.
Yeah.
From north to south. Understand, what to do, how to bring down costs.
Yeah.
And with that thesis, we ended up investing in that business alongside a few other investors. One of them was, of course, Kaval, who put his own personal check at that point in time. Fireside was not yet born there.
Okay.
So this is pre-Fireside days.
All right.
So that is another business. So a few other businesses. Some of them are on the science side. More deep science. They still to see the journey of the day. But these are the kind of businesses.
Is it very hard to get buy-in from other investors when you're talking about something like something like deep tech or say climate tech, where the horizon for you to be able to make money is very far away?
No, see, things are changing and changing very quickly. I'm probably still a little old school in terms of the businesses we want to invest, but I think the world is changing significantly fast. The time to launch or the time to get a payload into the space today is shortening. The cost is coming down tremendously.
Yes.
So things are changing at a very fast pace.
Right.
And of course, there is a set of investors who think that these are the things of the future, and we need to look at these opportunities. Of course, space tech maybe there is a long gestation period.
Yeah.
Because you're investing like for good 3-4 years.
Easily, yeah.
Minimum,
yeah.
Right? And then, it's like in the 90s, people used to have launch parties, but no one had a landing party. Okay? So वो अभी पता नहीं है, मतलब हो रहा है. But it's still not at a pace, where you can take a judgment call. So, there are investors who would be averse to these kind of sectors. But, again, there is a set of investors who understand that I need to be ahead of the curve. I need to back these founders because things are, the timeline or the cycles are getting shortened.
Right.
Okay. So there is, for example, we are now also probably looking at, investing in companies in this space.
Right.
Whether we'll make an investment or not, that time will tell. But we've started looking at it because we think that, these timelines will get shortened over time.
Right. Which brings me to my next question. I mean, for you to be a VC and for you to understand what industries and companies are like what the behavior patterns of those companies are like, you'd have to be on top of your game, right? Which means that you'd have to have like at least more than surface level understanding of different companies and different areas. How do you stay on top of the game? What are your consumption patterns of media like?
No, so see, obviously, you need to read a lot.
Yeah.
Okay, I mean, you need to be well versed with what is happening around you.
Right.
The good thing today, sitting in India, is that a lot of the largely built startups. I mean, I'm not saying all of them, but a lot of them are probably taking a bite out of companies which have been built elsewhere, mostly in the US.
Yeah.
Right.
Most of the
And references to them also gives you an insight in terms of what behavioral pattern will change.
Correct.
The only delta where I see is for example, consumer. Right. The consumption pattern in India is very different from a developed economy like US.
For sure.
Okay. US is more modern trade.
Right.
People will go 30 miles out to a grocer to buy their whatever weekly, monthly. But even in a market like US, there are businesses which have been built around food delivery, around commerce. And if a country like that, which was mostly modern trade, unlike India, which is mostly GT, when you go to
GT
general trade,
Okay.
you go to a neighborhood kirana and you buy your stuff.
Right.
Adoption curve could be very different, right? But adoption is happening.
Right.
Convenience is playing a big factor
For sure.
In the minds of people.
Yeah.
And you need to read a lot to understand what's happening in terms of behavioral change, in terms of mindset of the consumer, and that gives you insights in terms of what kind of sectors you need to bet on. I mean, I met the top deck team of a very large consumer company, and one of the sectors they wanted to look was pet care. And I had this question to them: why pet care? I mean, while there are a few funds which have already invested in pet care, what makes you believe that this is a long-term sustainable?
Right.
Is it like a stopgap?
Mm-hmm.
Is it a really large market for such a large FMCG company like yours to enter this segment?
What they say?
So I think what they're saying is that we don't want to be left out. I mean,
okay. There's FOMO then.
There is FOMO. There is FOMO, right? But interestingly, what they're saying is that there is a set of emergence of people who want to adopt
yes,
pets, right? And while that data may not be large today, they believe that this will go up substantially.
Correct.
Okay, and that's why they want to enter this category early and probably play a role there. So interesting perspective that traditional companies which have largely relied on different models today are opening up to figure out that there is these sectors which we need to enter into to keep ourselves alive in the game.
Right.
I mean, they will not collapse, but
yeah,
there is someone else who will probably dent a little bit into the share.
Right.
Similarly, a lot of companies again have been like a single channel play. If you look at traditional companies, right? And today, given the consumer landscape in India, you need to be an omni-channel. I mean, we invested in omni-channel companies way back in 2017. I mean, it became a buzzword in post-COVID. But I think channel is channel, right? I mean, in your business, you will have different channels. You will have similarly for a consumer company, you need to be available in the channel where the consumption is going to happen.
Correct.
As long as your product or service is selling, forget the channel. Channel could be online, offline, whatever.
Right.
So while everyone was going around D2C, I think around 2018, we invested in a company called Fitso. Okay, which was a service brand. They were doing a very simple thing. I mean, they were actually taking over existing swimming pools. Investing, a little bit of money in upgrading that.
Right.
Probably making it all weather by doing a heating, cooling.
Nice.
And they were going to, allow consumers to use it.
Mm-hmm.
Now the insight there was pretty simple.
Yeah.
I mean, the simple insight was that swimming सीखने के लिए उधर डुबकी लगाना है.
हाँ.
तुम घर बैठे virtually swimming नहीं
सीख सकते. Correct. Yeah.
And every parent wants to send their children to go and learn swimming.
Yes.
Okay. Most skill. Of them. It's a life skill, right?
Yeah.
That was a simple insight, and there was a company which was trying to build this. Okay. And we looked around.
Yeah.
The country. We went to some ex-sports star who were running swimming pools.
Okay.
There was someone, so in Bangalore, someone who was running about 4-5 swimming pools. So we figured out what metrics they were doing, what was the business they were doing. And then we figured out there's a viable business here.
Right.
So we invested in that business. They scaled to like about 30 pools.
Mm-hmm.
COVID hit.
Yeah.
Okay. of course, when COVID hit, nothing happened there.
Yeah.
But we were always very clear कि यार swimming सीखना है तो जाना ही है ना pool में.
Correct.
ठीक है. अगर if the company can survive that COVID wave,
Yeah.
that business will get built. Fortunately, post that, Zomato came and bought the business out.
Okay.
They subsequently sold it.
Interesting.
But the inside there was pretty simple, right? I mean, inside is simple कि swimming सीखना है तो वहाँ जाना है. मतलब तुम virtually swimming नहीं सीख सकते.
Yeah.
So those kind of things is what, so for us or for me, it's more about understanding the fundamentals of whether you can create a business.
Right.
Same way we've invested in a company which is in distribution,
Right.
FMCG distribution. Very simple. I mean, you had a lot of brands. They used to appoint their own stockists.
Okay.
They used to appoint their own distributors.
Mhm.
And then these distributors would go and fulfill to the retail stores.
Okay.
Which is the kirana shops or the
Yeah.
modern
Yeah.
trade.
Yeah.
And there were a lot of brands, who had their own set of distributors. They had clauses which said that you cannot work with a competitor, etc., whatever. Okay. But what was happening in the process is that you were duplicating infrastructure.
Yeah.
You had your own warehouse, you had your own set of distribution guys, you had your own set of delivery guys, you had your own set. But that kirana guy was probably ordering from all the brands. He would order he would order salt from someone, he would order biscuits from someone, he would order, let's say the other stuff from, HLL or whatever, right? And we said that if someone can actually unify the infrastructure, right, there is a play to be there. So there's this set of founders who came to us. They said, this is what we want to solve for. Acceptance could take time.
Yeah.
It took time, but they've scaled beautifully. I mean, this is a company where we invested when they were about 1 crore a month in the distribution space and authorized distribution play. Today they're at north of 120, 130 crores a month.
My God.
Okay. So फंडामेंटल सिंपल सा इंसाइट था कि कंज्यूमर को माल चाहिए,
Right.
वो तो कंज्यूम करेगा, रिटेलर को चाहिए ही चाहिए.
Yeah.
Can someone remove these duplication costs?
Right.
And this is what they today. So today they have a warehouse and they've gone and convinced the brands also कि from the same warehouse I will service a multiple, and they use technology. Where the tech came into place. For example, there could be a Shah outlet which could be named as Shah in the books of, let's say, a Unilever. It could be Shah & Co in the books of Britannia. It could be Shah & Sons in the book of someone.
Yeah.
But they did a lat long, they figured out कि ये same store है भाई.
Right.
ये
Yeah.
3 order आया है, साथ में
Same
fulfill
thing.
करो.
Yeah.
Right. So use tech to solve for complexity.
Right.
And reducing the cost of servicing them.
But this is about building insights, right? What I'm saying is, how do you source the data to build insights on top of? Does it come from conversations that you have with your contemporaries and your peers? Does it come from information that you're absorbing? Or does it come from, say, just plain intuition?
No, so it's, of course, there is data and information which you need, right? And
Okay.
you need to consume data and information. So one source is obviously, reading a lot about various things happening in the ecosystem in general, and not necessarily in India. Though we are
Right.
investors only in India.
Yeah.
I mean, I also read about, what's happening in terms of different business models which are being built,
For sure.
maybe in the developed economies.
Yeah.
Second is, obviously talking to peers and understanding where they are investing, what kind of themes they are looking at, what they believe, could be game changers in the future. So, recently met, a blue chip VC, and he said, premiumization in consumer is a theme.
What does that mean?
What it means is that there is a new aspirational class which is building up, right? And they would want to consume a premium product.
Okay.
And the example he gave, I'm just quoting the example which he gave, is that he said, there is a Samsonite in the luggage space.
Right.
And then there is a VIP which was there, right?
Yeah.
But there's no one in between these two.
Yeah.
Right? And there is a set of consumer class which wants more, more trendy looking,
Right.
more
Contemporary. Yeah.
And there's a brand, which is coming into this market, and we will chase that. And
Right.
they ended up investing in that brand.
Yeah.
So premiumization as a play will, in consumption is a theme which they want to chase.
Makes sense.
So,
Makes sense.
sometimes conversation with peers also gives you some insights in terms of, what they are looking for in terms of their investment thesis. And that also helps. But at the end of it, the stage where we invest is still very early.
Yeah.
Right? So there is also an amount of intuition which, marries the data, which marries the industry the founder is playing.
Yeah.
Which marries, what is the size of that industry, what is the depth of capability which the founder has got, what is his execution capability, and
Correct.
above all, where does the founder rank in terms of, pulling this two out.
Right.
So it's a combination of both, but knowledge and data is required. I mean, from various sources. It could be digital, it could be It could be, referring notes from other investors,
Right.
and investors could be from across the border as well.
Right.
So
Do you
that's
do you
what.
hold an unpopular opinion, like something that is your opinion that does not sit well with the rest of the industry? For example, like something that most VCs think is necessary or something that they believe in very strongly, but you think that it's not probably very.
I don't know whether it is unpopular, and maybe it is. A lot of these VCs. I mean, I'm not saying all,
Yeah.
but a lot of VCs, focus a lot on the B school or the engineering college a founder went to. I mean, maybe there is data to prove that they perform better than the others.
For sure, yeah.
But we have also invested in founders who are probably not from the elite pedigreed, institutions, and they've done reasonably well.
Right.
So I think that's one thing. Two is, there is also this thing that a lot of founders believe that you need to have like a great team to build a business out.
Correct.
Right? So or a lot of investors who believe that they should be a great team. You should have all the functions filled in.
Yeah.
I think that will be built as the company scales.
Yeah.
Okay, it's not necessary that you need to have pedigreed people for every post and designation.
Makes sense.
What you need to have is high on execution capability kind of people to fill out the respective positions.
Right.
So again, that's, I don't know whether it's a popular or unpopular, but we believe that you don't need to have you need to have good people.
Yeah.
But the people who are doing a particular job or function within an organization, they need to be specialists in that.
For sure.
Right? So, and that's very important. I mean, it's about marrying the skill set of that person with the function he's going to handle.
Right.
Okay, you cannot have a person who is very curt in terms of responses sitting in the HR.
Absolutely, yeah.
Okay, so you need to marry, and it need not be a very highly qualified. I mean, as long as the person understands the function of what he or she is doing.
Makes sense. Yeah.
You need not have a very pedigreed team there. That's our view, but
no, it makes sense. Yeah. And has there been an opinion of yours that has changed now from okay, another way to ask that same question would be, if you were back, say, in 2012 or 13, are there certain things that you would do differently with the current knowledge that you have right now?
See, I mean, I wouldn't say we're doing things differently, but with additional streams of knowledge, right, and which you get every day, your perspectives could change.
Yeah.
Okay, for us, fundamentally, I mean, as I look at investing in business, fundamentally, I drill down to the basics.
Okay. Yeah.
Okay. But what has probably changed is the perspective of whether, let's say, 10 years ago, I wouldn't have probably invested in a space tech, right? But today, with the kind of knowledge which we are seeing, with the kind of changes which is happening in the environment, maybe there is a possibility that the timelines will shrink and there is an outcome which you can make in 10 years.
Yes, makes sense. Yeah.
And that's a change in perspective. But even then, the fundamental of the investment thesis is still to understand the basics and then collaborate, retrofit, whether the founders, which is largely the team, the vision and their adaptability and their execution all marries to what we are trying to get as an outcome.
Right. And do you think that that's an opinion that is held by other?
I'm sure it. I mean, in this industry, I guess most of them would have their own nuances of how to look at a transaction. But I'm sure at the stage where we are investing, a lot of them would be taking a call on the founder, right? I mean,
for sure,
ultimately, and definitely, with knowledge, perceptions or inclinations could change.
Right. Also, another thing that I was just thinking of while you were saying this is in the last, say, 10 years or so, especially after 2012-13, there have been some marquee events which have been which have changed the game permanently, right? I mean, you could positively or negatively. One could be, for example, India leapfrogging from, say, not even being users of computers to everybody having a phone. Internet being very cheap, right? Every media consumption going through the roof. There is also like COVID coming in. And now there is Gen AI, like capabilities of AI being used to supplement human
Sure.
things. How do you think that this is only going to okay? Do you think this is going to happen more frequently, like things like these events such as this, or do you think things are going to slow down?
No, see, I mean, I'll take that in two parts. One is India leapfrogging. I think India is always leapfrogged on technology.
Yeah.
Okay, so if you look at the stock market,
Hmm.
we were adopters of what today is a system which the world is replicating.
Okay.
Okay, if you look at telecom, I think most countries move from 2G to 3G to 4G to 5G, right? We leapfrogged. I mean, 2G se seedha 4G, 5G pe pahunch gaya.
Correct.
Whether you look at smartphone adoption, again, there's a leapfrog which we did in terms of adoption, because we brought, I mean, not we, along with China, the cost came down, but adoption was far superior and faster here.
Yeah.
Right. So in terms of technology adoption, I think we've always been at the forefront.
Right.
Okay. And when I say at the forefront, India has got this tendency to leapfrog.
Right.
When I say leapfrog, they will leapfrog an entire generation of tech.
For sure. Yeah.
Okay.
Yeah.
And that's happened everywhere. And
Yeah.
and that's very evident in the form of the digital adoption which we see.
Yeah.
Right. I mean, like payments, for example. I mean, we will leapfrog far ahead of the world.
Oh yeah. Yeah.
Okay. So that tendency of India leapfrogging a technology will always remain.
Okay.
Okay.
Mm.
And I'm actually saying leapfrog, which means that we are actually not following an organic path of 2G,
Yeah.
3G, 4G.
It's just
We're probably jumping
Yeah.
one entire
Right.
tech gen.
Right.
And that's been the nature of how we are evolving as a country.
Yeah.
To your question of whether this will happen in the future, I think that leapfrogging will continue.
But at this scale,
I mean, nobody thought 7 years ago that e-commerce would get replaced with a quick commerce, right?
Right,
I mean,
right.
today quick commerce is probably not replacing an e-commerce, but they're probably denting what an e-commerce. A big basket today is only doing BB now.
Yeah. Yeah.
Right. I mean, so this probably tells you that maybe something else will come up tomorrow.
Yes. Yeah.
Okay. Now, how quickly, how fast? I mean, that we can't say, but
Okay.
I'm sure that there would be instances where a new channel emerges which could probably be much faster than what the older channels were.
Right. No, but like now we also have like the capabilities of AI, right? So one thing that I want to ask is like, are we approaching technological singularity where it is going to go beyond the comprehension of human beings to make decisions which affect the market? So is there going to be a time when you are going to be, say, could there be a time when you are investing in a company that is run by AI?
Yeah, so I'm a chartered accountant, and I'll give you an anecdotal answer to it. I mean, it's for you to interpret.
Yeah.
Right or wrong.
Yeah.
So what is the oldest profession in the world?
Prostitution.
I mean, even older than that.
Even older than that.
So I'll tell you, it's accounting.
Really?
Narad Muni was put in there to count how many souls are there on earth. Right? And he's the one जिसने हिसाब किताब रखा कि अच्छा सोल है, खराब सोल है, whatever. I mean, it's an anecdotal evidence, right?
Yeah.
But the point I'm saying is that whatever happens in terms of tech evolution, there are certain decision-making parameters which will have to be human intervention generated. So I don't think tech, will replace a human behavior or human decision-making capability. I mean, it could expedite the process of decision-making for a human.
Yeah.
But ultimately, I think decision-making has to be
organic.
Yeah. Right. And it also delves into the fact that the evolution of tech has been very rapid.
Yeah.
Right. What is the degree of tech you want to adopt in a business is something which you need to decide. I mean, you cannot allow technology to run, and maybe if that happens, maybe we'll become obsolete. I mean, tech will probably decide कि किधर invest करना है, right? But I don't think that's going to happen. I mean, you will still need. I mean, there are robo advisory in the fintech space. A lot of companies did robo advisory about 5-7 years ago. Okay. Basically, they built tech on the back of robots, which would decide where you should allocate money, what should happen, what will happen. And if that was a success, then probably you didn't need all the wealth management firms in India today.
For sure,
right?
yeah.
So I don't think wo hoga.
Mhm.
You'll still need some kind of an intervention, some kind of balancing act, which we will have to do. But tech will definitely play a large part
Yeah.
in influencing the decision, right? In terms of the pace at which you could move, the pace at which you make decision making, the data which is available for you to make decisions.
Yeah.
So all that is going to be influenced largely by tech.
All right.
Uh,
Well, what's the future roadmap for you, Sprout Capital and Sprout Investment Banking?
No, so we are currently deploying out of a fund too. I think we will, like I said at the beginning of this podcast, that so far we've raised 2 funds, mostly from organic or mostly from people whom I know in our friendly circle, and fund 3 is something which we'll raise towards the later part of next year, and which should be that's when we will hit the market. We'll get probably institutions on board. Roadmap, it remains pretty much doing more of what we're doing, just that we will accelerate more quickly as we go ahead in terms of investment. I mean, the journey so far has been organic. We've taken our time. We were also hit by 2 waves of COVID, which slowed down a lot of things for a lot of them in the past. But as we go ahead, we'll probably accelerate our deployments. Largely also, because we are seeing a very interesting set of entrepreneurs who are coming and solving for different use cases today.
Correct.
There is a concern in terms of where valuations were in 2021. That's mellowed down a little bit. But expectation on founders still remain high. But I think that will all get muted. But the interesting thing which we see is good quality founders. I'm not saying they're coming in huge numbers, but there is still a set of very good quality founders who are coming with very interesting solutioning for existing behavior and patterns.
Correct.
Okay, and that we believe will require innovation, and that will require capital, and that's why we'll probably be relevant in the times to come.
Beautiful. How can people reach out to you, Sunil?
Yeah, so if you're looking to raise a seed round of, let's say, up to $1 million, easiest way is to write to pitch@sproutvp.com. You can reach out to me personally at sunil@sproutvp.com. That's the easiest manner to reach out to us, and rest assured you will get a response. I mean, it may take some time from us, but you will definitely get a response.
Yeah. I can vouch for that. Sunil is an amazing man to talk to. I love the conversation that we have today, and I'm looking forward to the next episode, Sunil.
Sure. Thank you.
Thank you for taking out the time.
See you.
Thanks.